or you find it confusing, okay. Okay, just slow lah. Okay, later you ask me what is confusing you. Okay, so okay, sub pattern, the type of sub pattern, mechanism and application. So I will touch about this lah, the type of sub pattern. After this, we practice. We just go straight to the chart pattern number one. Okay, number one is rectangle. You see, in the Dow theory, actually, we do call it as accumulation phase or distribution phase. Depends towards the level lah. Let's say they appear on the top, then distribution. At the bottom, then it's accumulation. So just wait for the breakout. In this situation, the price just break down. So they give you signal which is you have to be a seller. Okay, so this is the neckline. Like I said, to draw horizontal straight line or any trend line, at least you need 2 points. So they give you 2 points and even three. Three is much better. Then you draw the straight lines at the bottom and at the top as well. Then just wait for the breakout. So the market has decided for us to be a seller. Okay. Then I give you the formula how to enter at the right level. So actually, we may expect that according to market structure, they must retracement, downtrend retracement. Okay. This is the drop, the retracement. Then from here, we may expect that the price will continue to go down. Reach this level first. This is like a teaser lah, not a teaser lah. Just extra information for you. Okay, so if they want to continue this uptrend, they should break out or break down or penetrate this level. If they, if okay, wait, back. Okay. If they didn't manage to penetrate this level instead of rebound, then yeah, they will move sideways. We may expect that. That's why trading is like a predictable game lah. There's no right or wrong in technical analysis. That's why we calculate our risk to reward ratio. Okay, the next one is this is rectangle, very easy. That's why I love rectangle lah. And this one is uprising rectangle, horizontal rectangle. Volume, you mean, yeah, volume. Let's say you see the price. Okay. Let's say that you see the price breakdown here. So downtrend, right? So we may expect that the volume is also big lah, big. More than average. Let's say the average one is here. Okay, only then you can say that this breakout is valid. And then number two is we are looking for the candle. Let's say here, breakdown. This is, okay, they close, open, close. Very small close over here. Then we have to be careful lah. Let's say the candle, they break out or break down with big Marubozu, bearish Marubozu. Then we can say confirm this one is going to be reversed from sideways to downtrend. Okay. Then we go to the next one is head and shoulders. This is reversal chart pattern. For rectangle, it can be reversal and also continuation. For head and shoulders, there must be a reversal. Okay. So remember that just at we must have at least 2 points. So then it can be our support level or neckline. This is very critical moment for us. Let's say the price hovering over here, hovering, and somehow the price break down, and then we have to be a seller. Just wait for the price to make a pullback, and then we enter over here. Later I show you whether I demonstrate in the trading view lah. Okay. Then you can measure. Later I demonstrate. You can measure how long you can hold this position. Okay, let me go. Same goes to the reverse head and shoulders. This one is direct head and shoulders. This one reverse. Reverse must happen at the bottom. Remember that. Happen at the bottom. Usually, most of the time. Then you see this is the neckline. You draw the straight line or uptrend line over here. The neckline, the support. Sorry, the resistance. This one is resistance. Okay. And then also the neckline of this reverse head and shoulders. Just wait the price to break out. And then after breakout, let's say with big bullish Marubozu, green candle, and then we can expect that the price will go up. Then you have to decide to be a buyer. Okay, this one also head and shoulders. You see here. Reverse head and shoulders. As they break out and then they pull back, and then here is the uh, uh, significant level lah. Very a good level lah to enter actually. Then you can see the price go all the way up. And it takes some time actually. This is fresh breakout. First, for the first movement here, it just reach this resistance. Second time you try, just reach the previous resistance. And third time you try, they go all the way up. It takes time. They are playing with your emotion lah. Okay, this one is the next one is double top and double bottom. Double top must happen at the top. Remember that. Okay. As simple as that, just identify the neckline. That's why very important here. And the critical moment is when they break down, then like I said before, you may expect for the downtrend to happen. Then you have to decide to be a seller. Okay. Seller, I don't know how much the price will drop, but when the price make a reversal or retracement at this level, then I will short over here. Then my first TP should be the nearest support. Okay. That's why trading, they just hit and run. Wait for a pullback, then they enter. They don't enter right after the breakout. They enter right after the pullback or retracement. Later I show you why. Okay. This one is double bottom, happen at the bottom. As you can see here, then this is the neckline here, and then breakout. So we have to decide to be a buyer, right? As the price, I don't know how much, like I said, I don't know how much the price will go up. Once the price make a pullback at this level, this is my buying zone, buying level. So I buy here. Then my next TP should be, first TP should be here. Should be here. So I expect the price will go all the way up. The stop loss over here. Must be cooperated with the volume as well. And then the size of the candle, breakout candle. Like I said, like I show you before. Yeah, this one, yeah, you measure lah. Yeah. From the recent top, you can see here. From the recent top, you just drag. downwards lah. Started with this neckline lah, at this neckline. This is roughly. Actually, one more method is you can count the candles, how much the candles are needed to form this complete chart pattern, and then from the total of the candle, later I show you. Then you divide by 2, and then from the recent top you measure, and then you can and then you know lah how for how long you can hold this position. Actually, chart pattern is actually it's good lah for the individual stock. Individual stock is quite tricky, but if they follow chart pattern, if they form chart pattern, then it could be very significant lah. For trading, actually, the support and resistance. For individual stock, since you are using the daily time frame, then chart pattern is the best lah. Ordering formation, yeah, almost similar like to the accumulation and distribution phase, right? Like I said before, as the price compressing, there must be something happen. Like I said, let's say the demand curve, supply curve. Okay, this is equilibrium, right? So this is what, then this is the equilibrium in the chart. So we convert into chart, and then you can see this pattern lah. Meaning that there's so much money you can make. There is no big return lah you can make when you trade by using this chart pattern. Actually, we want this, so when you see this, just be alert lah, be alert. There is there is no big return you can make when you trade at this level, unless you see the big chart pattern lah, big chart pattern. For the high risk trader, they will enter lah, they hit and run. Triangle. Okay, triangle. Okay. Like I said, same concept, neckline, just wait, or neckline of support, just wait for the breakout. Then pull back. Usually they must pull back at this level lah. But in this situation, they just form another chart pattern. This is like a bearish flag. This is like a bullish flag. This is continuation chart pattern. Double top, double bottom, head and shoulders, they are reversal chart pattern. But for the bullish flag or bearish flag, they are continuation chart pattern. For the high risk trader, let's say they see, oh, I have to be seller since I see the breakdown. Then since they form the bearish chart pattern, then they enter over here. So the stop loss is over here. This is like a quite risky lah actually. The next one should be triangles. This one is triangles. Just wait for the breakout. Another one is I may draw horizontal line over here. Since this is the resistance, you see I wait for the price to break out this strong resistance, and then pull back. This is my buying zone, and then the price go all the way up. Like I said, this is steep increment. It may not sustainable. That's why they drop. Actually, it's predictable actually, and drop according to market structure lah. High, low, lower high, lower low. That's why market structure is really important lah. The price action trading. Okay, triangle finish. Okay, triangle. This one I can read by yourself. That's why if you want if you want to see the chart pattern, the breakout fail or not, you see at the, let's say lah, rectangle, right? Rectangle. You see let's say they want to break down lah. Oh, no, no. Can you see my screen? What is going on with mine? You see here. Can you see my screen? I cannot see my screen. Wait, and let me stop share first. Yeah, let me share. Okay, now I can see. Okay. Let's say you see the rectangle. Then they want to break down. Let's say they break down. They must break down with strong candle. If like this one, this is a valid breakout. If they fail, if they show you the failed breakout, it's like they form small breakout over here, and then show you tail, for example. Tail means rejection, not a strong breakout or breakdown. So has to be careful with this kind of breakout. Okay, so for the assignment, analyze the following stock charts to state the possible move for the new future. Would you buy in the short term? So for this one, you can use any individual stock or any instrument. This one is you analyze the current prices, the current price lah. Okay. But in the same assignment, I want all of you uh find out as many chart pattern as you can for that individual stock. For example, a double top, double bottom, head and shoulders, rectangle lah, rectangle. Actually, let's say lah, double top. This is also rectangle. Uh, this is also sideways, but with a bigger size. Uh, then just wait for the price to break up or break down. As simple as that. The concept lah. Okay, so I open my trading view. For example, here, this is gold market. I use the rectangle. Think I noticed this is one of the chart pattern. Maybe double top also can, and head and shoulders also can. So just notice the neckline. Just identify the neckline. Okay, let me open the line chart. Okay. Switch back. Okay. As you can see here, the price break down from the line. They were trying very hard to break down. Finally, they break down. They break down. Then they make a pullback. So this is our selling zone. Then we keep entering. We keep entering short, 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 short. Maybe they will be floating for a while. That's why I'm telling you must keep patient. And then somehow the price drop. Hit your first TP over here. Okay. Pull back. The same zone, the same selling zone. They react. Meaning that they reverse again. You see? Until the third time they reach this level. Let's say you short. The third time you cut loss. But just respect the zone lah. Then from the selling zone, fail right, how to counter the market? They go up, hit the stop loss. Then they make a pullback from selling zone to buying zone. They drop, and then this is our buying zone. They go up. Actually, BPE. The formula is BPE. I just be transparent lah over right here. Okay, BPE. B is breakout, break up or break down. Okay, our signal. Our signal. Pullback is we just wait for the pullback. Remember that market structure must form like this. So we are breakout, right? They break out, we are waiting for the pullback, then we enter over here. The same concept you apply into the chart. Then you enter here, that's why the price go all the way up. The same concept you just reverse for the downtrend. They break down,
Okay, so Alif, you are back, right? Okay.
Okay, Miss. Okay, let me share that my screen. Okay, so just now is BPE, right? So the concept is we just wait for the breakout, pull back, and entry. So we identify the chart pattern, which is the head and shoulders or double top, whatever it is. We just identify the neckline over here. And after we notice the breakdown, then we have to be a seller. Okay, this rule number one is complete. Number two, we just wait for the pullback. At this level, you enter first position. Okay, you enter pullback or already done. So they go up and then your position might be floating for a while. That's the risk you have to face lah. And then you just after you enter, okay, enter. Then just wait for the price to reverse. The nearest support here is our first take profit, and they reach first BP over here. Second time they come back into your selling zone again, then they go all the way down. That is BPE lah. Remember this BPE. Okay, so far so good. Before we go to the assignment, remember, analyze the current price first. Can use trend line and all that. What is the current trend? Would you like to buy or short, or would you like to just wait the price to give you a signal first, or just stay aside lah? And then you come out with as many chart pattern as you able to find out. Actually, there are many chart patterns actually over here. This one, for example, sorry, this is double bottom. W. Double top is M pattern. This is also W. At the bottom, at the top, M at the top, W at the bottom. This is also chart pattern. Okay. Maybe can be double top or head and shoulders. As long as you see the price moving sideways, compressing, meaning that is chart pattern. There's no big detail over here. Compared to this, drop down here. Rally and drop. This is rally, this is drop. So we want this rally, we want this drop. So we have to identify the trend before. This is sideways. But for the big sideways, big size over here, then we call it as chart pattern. You see, they will keep repeating the same chart pattern actually. That is economy, the cycle in economy, cycle in the financial market, reversal chart pattern. This is like a breakdown. If we switch to the smaller time frame, you can see clearer the pullback. For example, H1. Okay lah, I just tell you because the we back to the assignment. So far so good with my explanation. Sorry for the problem before this. Okay. Okay, so I give you around 50 minutes every one of you has to try this, analyze the following stock charts, and then would you buy in the short term. Please use daily time frame, and then you find out as many chart pattern as you can lah. And then you explain to me where is the breakout level, where is the neckline level. I want to see whether you understand, whether you can identify the chart pattern, the breakout, the significant breakout or not. Okay, so I give you around 15 minutes. Okay, all the best, everyone. Okay, guys, have you finished and who wants to share first? Anybody wants to volunteer? If you can't analyze the current prices, it's okay, never mind. Just come out with the chart pattern you identify in your chart lah, in your preferred stock. Yes, Alif, you can try. Okay, let me refresh remote control first. Okay, this one is correct. Double bottom, since we see the break upwards lah. But has to be careful, this one happened at the top. So that's why it's like a fake breakout. You can buy, but they will give you a smaller return lah. Actually, you can see the price. You can see the price. Hold on. Actually, we can see the price go all the way up, but with a slowing momentum lah. Okay, and then this one is rectangle. Yes, correct. As you see the price compressing over here, and you just identify the support, the resistance, either one lah. Either they break down or break up. In this situation, they break up. So we should be a buyer. Then we buy here. Floating, your position might be floating for a while. Then they go all the way up and reach your first target. And then they continue to go up again. So this one is rectangle, correct? And then, yeah, this one is triple top. Okay, yeah, triple top. This is the neckline over here. Okay. Then we apply the BPE, and then the prices breakdown. So rules number one is complete breakdown. Then P, what is P? Pullback, retracement. Then we can enter at this level lah, at this zone, at this zone, at this support zone. Then as you can see here, the price drop and reach your first TP. First TP. This one is good for intraday trader lah. They just hit and run. Okay. Okay, then I want to demonstrate one more. Let's say M pattern. I want to find out M pattern. Double bottom, double top. Okay, double top. I want to measure how much candles are needed to form the complete chart pattern actually. I just pick up randomly lah. We try. Okay. This is like, let's say like this is M chart pattern. Okay. So you count from the first candle here until the last candle, the green color lah, the green color. And then you measure by using this ruler tool. First candle until the last candle. So totally we need 35 bars, 34. So divided by 2 is 17, right? 17 bars. So from the recent top over here, you measure 14 candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So you might close, your position at the candle number 14. Yeah, as simple as that lah. That's the number 2 lah. Sorry, the first method. For how long you want to hold the position or to close the position. Second one is the size of this. Okay, let me repeat one more time. Let me zoom in. Okay, you see this is the double top, right? Double top. Okay, this is the first candle. As you see, the price break up from this level. The big significant candle. Let's say this one is resistant, they just break out. Then form chart pattern. Then from the first candle until the last candle, the green or red color over here, just roughly lah. You measure how much candles are needed to form this chart pattern. So you can count manually. From here, 1, 2, 3, 4, 5. Okay, we just use ruler lah. From the first candle here, you drag until the last candle, which is the red color or the green color. Red color lah, red color. So totally 35 bars. 34 lah. Then divided by 2 is 17. Okay, then 17 from the recent top, double top, right? So first top, second top. From the recent top, you count 17 candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, sorry, 17, right? It's 35, 34 divided by 2 is 17, right? Okay. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7. You see? This is okay. And now it's correct. Okay. 17 candles. So that's number 1 lah. Number 2 is the size of this candle. Okay, we use trend line from here to here, and then you just clone. You drag downwards from the neckline. Remember, this is the neckline. That's why, like I said before, neckline is very crucial, very important. You see, so almost reach your target lah, your target. Actually, this is the first target lah. The calculation of the candle is number 2, method number 2. Number 1 should be the size of this chart pattern. Why? This is more significant. Why? Because they hit the support level here. Remember, if you want to take profit, you have to monitor the previous support and resistance. In this situation, our TP must be at the support level. Recent top, recent top. Here, recent top. Okay, remember we have to identify or monitor the previous support, lower top or higher top. The lower top one. But the recent top, second top lah. Okay, support level, right? So the previous support is over here. So we may expect that if they break down from the neckline, they may reach the support level, whatever it is. Okay. Then from the support level, we can say they must be at for a while. Support, they must support the price. If they penetrate, let's say lah, if they penetrate this level, then it can go be even lower. Trading is just support and resistance actually. Okay. Okay, so far so good. Later I will show you another example lah. Okay, so thank you, Encik Alif. How about others? Who else want to share? Alif done already. Then who wants to share? Okay, welcome Alif. Okay, Martin, you can share. And then Xiu Fang. Remember, chart pattern is very, very powerful, to be honest. Especially for the individual stock lah, because individual stock in Malaysia we use daily time frame. The bigger the time frame, the significant the movement. Okay.
Yeah, Alif, Martin here.
Okay.
Yeah. Okay. So basically, this was the previous line that I have drawn.
Okay.
So basically, I can see that there is the M pattern here and
Yeah.
the W pattern here as well,
Yeah.
right? Yeah. So the only thing I'm not so familiar is the one that you mentioned, BPE.
Okay.
Maybe you
I
can
will repeat
explain
one more
more
time.
on that.
Okay. Okay.
Yeah.
But this kind of drawing this is what I want lah. Very,
Okay.
very meaning that you understand that. You understand this.
Mhm.
You see here, you understand the neckline. Remember the concept is very simple. Let's say lah, rectangle.
Mhm.
Just identify the neckline over here. The neckline over here. Support and resistance. If they decided to break up, then we enter over here. If they decided to break down, then we enter over here. Then we go for short lah. This one we go for long or buy.
Mhm.
And then you apply to this chart. Okay, okay. We start from here lah. Since you see this is a rectangle, and then the price decided to break out,
Mhm.
right? I don't know how much for how long the price will go. Once the price pull back, at the support level, the resistance becomes support, or at the previous neckline, this will become our buying zone.
Mm.
Buying zone. Buying zone over here. Support. We must, basic thing in trading, we must buy at the support, buy at the support, short or sell at the resistance. Yeah, that is basic lah.
Mhm.
Then breakout, then pull back. We should enter over here actually.
Okay. So
Uh,
you mean that
okay.
the impulsive going up, and then once it going up and then it goes down to the
Okay.
support line,
Yeah.
then we buy from there.
Yeah, correct.
Okay.
Because
Okay.
market structure, if you remember before this, I show you the market structure, right? If they doing impulsive already, they must retrace for profit taking. They must break for a while before they continue to go up, right? This
Okay.
is pullback. This is
Mhm.
pullback. Breakout, pullback, and then you buy here,
Okay.
go up.
Understood.
Okay. So the significant is I don't buy right after the breakout because okay, let me okay. If you enter over here, your stop loss is over here, right? Your TP should be over here. So 1 to 2. If you buy right after the breakout and somehow the price make a pullback, then you might be floating. They say your stop loss is over here, then you make a loss with a bigger with a big of loser.
Mhm.
Okay, you see, instead of your enter right after the pullback. You can measure.
So
Okay,
Alif,
so
if let's say this part, right? Let's say for example, this part, is it considered as a double top here? It's a bit hard to see, right?
yeah, has to zoom, but but clearly that is a retracement for uptrend.
Okay.
Later you learn Fibonacci how much
So
the price will retrace.
okay.
So
So it's like
here,
consolidation also lah, right?
consolidation. Consolidation is actually horizontal. Retracement, yeah, retracement is like this. This one is retracement. Consolidate is like a sideways or compressing. Just like this.
Okay.
Okay. So, okay, breakout, right? And then first drop, they didn't manage to reach the buy zone. Second drop also. Third drop, and then they reach, they collect your order, for example. Then they go all the way up. Your first TP should be the previous support and resistance. Remember that. In this situation, buy. So our TP must be at the resistance. So this is the previous resistance, the nearest resistance. So hit your first TP. If they go even further, then later I will teach you on how to do break even now. Meaning that we are not relying only to the single position. You must enter at least 2, 3, and 4 like that lah. Okay, so here the neckline breakdown. Okay, so breakdown is breakout, right? Then pull back. So pull back.
And then entry.
Yeah, pull back. Then entry over here. Your stop loss must be at the over here, and then they go all the way. First TP should be here. Remember that. Okay, that is number one. Number two, you measure the height of this, the size of this chart pattern. Okay. Number three is you measure the candles, like I said before, and then you measure how many candles needed to form this chart pattern. And then wait and then you divide it by 2 from the recent top. This is quite complex this chart pattern. For Genting, yeah.
So when you say just now you mentioned about the using the ruler, right? So I should be I should be measured from where?
Okay, actually I can see this is like a head and shoulders.
Yeah, it is lah. Actually,
Yeah.
it's like
And then from the recent top.
so this
This
one.
is candle first candle, last candle before they break down here. Then you calculate how many candles, and then divide it by 2, and then from the recent top, let's say here, right? You count lah. You can practice.
Okay.
We try.
Okay. Okay. I will try my
Yeah, you try.
and see whether it is actually tally with this or not. Okay, sure.
Okay. Okay.
Thanks.
Thank you. Okay, welcome. Okay, so how about others? Shufang? If I'm going too fast, you can let me know. Let me record the first remote control first. Yeah, this is like a double top lah. At the top, and then okay, this is the neckline. Yeah, correct. Then break down, pull back. So the TP should be your first TP should be here. Second TP should be the nearest, also the nearest support. And then the TP number 3 is 3. Okay. Yeah, this is double top. Just wait for the price to break out. Either break up or break down. let the market decide for us. And then we just react right after the pullback. We enter after the pullback. Remember that. Yeah, this is double, can be double bottom, can be W, can be rectangle. Yeah. As long as you can identify the neckline, shouldn't be a problem. Just wait the price to break out. Like this one, they break out. This is like a almost strong candle lah, but not quite strong. Okay. Also volume not promising, but it's okay. Remember that volume is indicator. I may prefer the price itself. Okay, then breakout. I don't know how much the price will go. Once the price make a pullback, then this will be my buying zone. Let's say they keep decreasing. This I will keep entering of buying until they hit my stop loss over here. In this situation, they reverse, they rebound from here. Yeah, breakout, pullback, enter, go all the way up. Yeah. Okay. Double bot, not double bottom, yeah, correct. This one can be rectangle. Yeah, double top. Like I said before. This is a good example. Quite tricky, but still follow our BPE. Okay, let's say you see this, you said that this is double top, then you see they prefer to, they decided to break down. Then your mindset is you have to be a seller. So according to BPE, they make a pullback, then you enter, first entry is here. Then somehow the price go all the way up. For high risk trader, just they keep entering. And sooner or later, they must respect this level, this selling zone. And subsequently, they go all the way down. Play with your emotion also. Then somehow go all the way down. That's why just trust uh your BPE lah, your BP, your plan. Just trust your setup and all that. This is double bottom. This is no wonder lah. This is nation stock, so quite tricky. Quite tricky. Let's say this is double bottom. Using BPE, they break out, pull back, they go up again. We should enter here. They go up, and then unfortunately they didn't manage to reach our nearest resistance, and somehow they and hit our stop loss. And subsequently they go all the way up, reach our TP before. They hit our stop loss and then they reach our TP. So quite tricky for individual stock, especially in Bursa Malaysia. So has to be careful. Sometimes many manipulation. This one is head and shoulders. Okay, left shoulders, the head and the right shoulders. Yeah. This one I think can measure. Okay, let me measure together. Okay. Okay, this is the chart pattern. You see the breakdown. Okay, so we have to be a seller. Let's say they offer you short position lah for genting. Okay. Remember, we wait for the pullback. So as they keep increasing, making a downtrend retracement, then we enter at this level lah, roughly. Actually, we can draw selling zone by using the candle over here. Maybe the size of this candle, the last candle over here, and then the last candle over here at the support level. So maybe we can draw rectangle of selling zone. Okay. For the first retracement, they were unable to reach to collect our order. And then the second time, third time, they managed to collect our order. Okay. But we can measure lah, we calculate lah together. Okay, from here, first candle until the last candle. We can use this ruler from here to here. So 60 bars roughly. So divided by 2 equal to 30. From the recent top, maybe here, we can calculate 30 candles. So here, recent top, remember, recent top, 30, 30, 30. So here, 30 should be here lah. So you may take profit at this level if you using this method. Okay, if you using the size of the chart pattern, okay, this is the size, and roughly lah. Okay, clone, we move downward. Yeah, there is your target. So you choose lah which method you want to use to collect to take profit. Okay. Method number 3 is after the breakout, pull back, then how to collect? Easy. Remember this. Breakdown, pull back, for example. So this is support, right? That is your first TP. Second time, your TP should be over here, but unable to reach lah. So maybe after there is 50%, 70% nearly to your TP1, you can collect the order. Sorry, you can collect the profit, for example. So right now you have 3 methods lah. How to take profit. Number 1, you calculate the candles. Number 2 is the size here, the height. And then number 3 should be the nearest support or resistance. Nearest support or resistance. So far so good, everyone. Especially Anshu Fang. So far so good. Any other question? Okay, thank you, Anshu Fang. I hope you understand now. Yes, Tehongzi, you can share right now. Welcome, Anshu Fang. Okay, Tehongzi, you can share right now. Or any let me refresh your control first. Okay, and after this you share. Oh, well, this one is very clear chart pattern, but somehow if you use BPE, they were unable to make a pullback. This is not a healthy movement actually. Maybe there must be big impact lah, over big effect over here. Okay, we start from here. Okay, so if we are looking for the daily This is like a still uptrend but sideways. We look at the monthly. In the last topic, I will show you uh how to do mapping lah. Let's say you want to entry at the daily time frame, then you should open the monthly time frame first. Make sure the current price is still far away from the historical high. This is historical high. Historical high. So this stock, I can see opportunities. Since this is the market bottom, so I expect that even they go sideways or they go up, and because at the bottom, right, after this session, there must be a stagnant for a while, and then they must come out with the growth. That is the economy cycle. Okay, then far away from the historical high. So I identify the price is at the bottom. So it good luck for you. Then we go back to the daily. This one is for the current price lah. Actually, they just break out. They just break out. Just break out and then pull back. Then they go up, hit the first TP. Here there must be a rejection and all that. Let's say they want to continue this uptrend, they should penetrate this resistance. I don't know how long the price will go. Once they make a pullback, then I will enter buy position over here. Then I'm expect the price will go up. Same concept. If they want to continue this uptrend, they should penetrate this level. I don't know how long the price will go up. Once they make a pullback, I will enter. And then they go all the way up. That is structure.
你嘅 stock 喺 container 入邊啊？
That's why market structure is important. It is uptrend structure.
呢個 phone 貨啊？嗰個 practice 你去我 drawer 嗰度攞啦。
Okay, and then this one is rectangle.
This show a lot, that's very
This
useful.
one a good neckline over here. So as they break up,
And open one now.
unfortunately, if you use BPE, they didn't collect your order.
你叫我 pull down， 你開到嘅人撳到我電話位。support
So we have to make some adjustment on this rectangle actually. Okay, this is correct rectangle, but if you want to draw buying or selling zone, make sure you prefer the last candle here or here. And then we draw one more time for the rectangle. We use this bearish candle for this inverted hammer over here. The size of the candle, this size. Okay, and then you see the price break out from this rectangle, then they make the pullback, they collect the order, they go all the way up. That is BPE. Support or resistance or any chart pattern, if you see the breakout level, they must form a pullback. Then right after the pullback, you can enter lah if they come into your selling or buying zone. Okay, this one is correct, rectangle. Rectangle, and this in this situation, they break down. Then as they go up and come back into your zone, and that is pullback. Then you can short or sell. Then your first TP should be the nearest. Started from here. The nearest support. Let's say you enter here, your nearest support is okay here, 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 and here, step by step. TP1, TP2, TP3. There is your first TP, second TP, you see, third TP. Then you spot the level over here. They must respect support and resistance. This is the 9 breakout. This is why in this situation I may prefer chart pattern and support and resistance lah. For the trend line, sometimes yeah, they can't follow your. We expect the price to go all the way up because they just break the downtrend line. But in this situation, they go sideways. Actually, we can expect that. Why in the economy, like I said, downtrend, let's say recession, and then there's no growth in economy. For example, they take time, and then they go all the way up again, and then sideways again, and then go for downtrend, then sideways, they go up again. This is the cycle. So far so good, Teh Hongzi. I hope you understand this. Okay, thank you. Welcome. Okay. Okay, who else want to share? Most welcome, Teh Hongzi. Okay, who else want to share? Okay, and double top. So,
Can you screen my screen?
yes, I can.
Okay, this is on Aji.
Okay.
Wait, hold on.
Can
The
you
control with you
zoom-
or with me?
Can you zoom in a little bit?
Yeah. So cannot zoom in anymore. Okay, so this is 2020 V recovery. And
Okay.
then I'm just charting from this point to this point. So let me just make it bigger. This line is drawn through the bigger. I'm confusing myself. Okay, this neckline here break
Okay.
down to this one. So I duplicated this line to this line for measurement. I don't know whether that's right.
Okay, never mind.
Okay, you want to take over the screen and change everything?
Okay, can. You said that this one is head and shoulder. Head and shoulders, I know. Where is the head and shoulders? You mean, can you show me?
Yeah, that one.
This one,
The box.
Oh, I see. This, where's the head? Here,
Yeah,
right?
head, shoulder, head.
Head,
Reverse head and shoulder.
The left shoulder is here, you mean?
Mm.
Or head, and then still there is no right shoulder. Okay. Okay, so if you say that if they complete, sorry. They say this one they form right shoulder, they should, they say this is uptrend, right? So head and shoulders is a reversal pattern. So you may expect for the changes of the trend from uptrend to downtrend. So in this situation, let's say the price, we have to wait for the breakdown. Only then we can short over here, then they go all the way down now. Then you can measure the height and all that. But still, this is not, they say this is not a complete head and shoulders, but good. Just wait for the complete chart pattern, but still they unable to finish the pattern yet.
Okay.
Okay. I want to show you something. Here you can see the significance. They say this one is I don't know the name of this pattern. As you see the price compressing, and you can identify the neckline, and then you see the price breakout, right? very big impact of breakout, big breakout lah. And then the price make a pullback. You see here. Then just then for the current prices, you see the price go all the way up. Why? Because they respect this buying zone. They go all the way up. It takes time, 1, 2, 3 times to go all the way up.
Okay.
Okay. The concept is like this. If you notice the rectangle, for example, rectangle, then the market decided to break up, for example. Then I don't know how much the price will go. Once the price make a retracement or pullback at this zone, our buying zone, and then we enter here, and then the price, we expect that the price will go all the way up. So CP is here, for example. You apply into this.
Okay, got it.
Okay.
I still cannot see short term. I can see the big picture, but small short term I cannot see.
Yeah, chart pattern good for a medium term and long term lah. Short term also can. But for a short term, rectangle lah, most of the time. Head and shoulders,
That's sure.
double top, double bottom, usually they happen at the bigger time frame. Okay, this one is double top. Okay, double top. Actually, you have to identify the neckline first. Where is the neckline?
Which one?
Should be here. So here. Then this will be your. Okay. Then they decided to break down. As the price go up, pull back, we enter here. This is the manipulation actually for this RG. Let's see our stop loss level is here, then they hit your stop loss level. They go all the way up, and somehow and finally they go all the way down. Right, that is kind of manipulation. So has to be careful.
Not a very nice chart.
Yeah. At least you follow your trading plan lah. That's why trading must have trading plan. Very short stop loss, very short take profit. You count your risk to reward ratio. But this is a nice chart pattern. But somehow I don't know why I can see the violation. Okay. So far so good, and
Okay, yes, thank you.
Okay, welcome.
So I'm going to stop sharing. Okay.
Okay, who else want to share? Yes, good. Okay, let me request remote control. Okay, Tehongji, you can leave. Okay, never mind. Okay, so for the current price, okay, this one is double. This one is not double bottom. Double top. Actually, Zul, double top must be at the top. This one is at the top. Actually, we cannot decide because this is not a complete chart pattern yet. Let's say they form like this, and only then you can say that this is a double bottom. Then just wait lah. Let's say double bottom, they should break out. Let's say they want to form double top. The first top, second top. And then this is the neckline, support level, the neckline. Just wait for the price to break down. And then, yeah, as simple as that. But I may expect they will form double top lah, double top. Why this is uptrend? Uptrend and then they want to reverse, for example lah. But there is no right or wrong. Okay. Double bottom. This one is double top actually. Roughly I can be here, the neckline, and can be here also. Double top. This one not a double bottom, double top. Why? Because we have two tops over here. Top, first top and then second top. This one. So this one should be double top. Okay. Double top. Uptrend, they form double top. Then we may stack from uptrend to downtrend. And then they break down. You see, this one is also met retracement lah. They go up. Then they continue this uptrend. So far, BPE is the most significant formula lah. So far lah. I'll show you. Oh, sorry. Never touch about this. Reverse head and shoulders. Can be also, can be. Left shoulder, head, and right shoulder. Yeah, breakout. And this one, good example. Breakout. And then I don't know how much the price will go up. Once the price make a retracement, pull back into this level, our resistance becomes support or our buying zone, then we enter here, then the price go all the way up. First TP should be here. Second TP is free. But actually, we must focus on the desktop here. Maybe previously, there must be a resistance that block the price to penetrate this level. Okay, let me see. Yeah, that's fine. They unable to penetrate even further. Why? Because of this big rejection over here. Later you will learn about the candlestick pattern. Big rejection, meaning that a strong resistance over here. That's why they cannot penetrate even further. Okay. This one is double top. Neckline. Also rectangle. Also double top. Yeah. Break down, pull back, go all the way down. The CP should be here, the nearest support level. And this one is market structure. Remember how beautiful this market structure. We enter right after the pullback, after we identify the breakout. We first breakout, pullback. And then this is the resistance, breakout, pullback. We enter right after the pullback. And then breakout pullback. For this, unfortunately, for this situation, they unable to collect our order over here. Okay, Zul, thank you. Okay, anybody else want to share? So far so good or not regarding to this pattern? Welcome, Zul. If not, I want to demonstrate one more time introduce you. Okay, Lihan. Okay, Kate, you can share. Yeah, very good. People talk. The neckline is important. Support. Neckline is support level. Let me request you also. Neckline. See? Break down. Then make a pullback. And you enter here. So your first CP should be here. That is method number 1. Method number 2, you can measure the height or the size of this chart pattern. Then you clone or you drag downwards. For example, roughly. For example. Okay. Number 3 is you can count how many candles here over here. And then you measure from the recent top. Remember, recent top. Imagine, let's say they need 30 candles or 30 bars, then divided by 2 equal to 15. Then from here, you count 15. You can count it loosely, 15 or 16 like that, roughly. As simple as that. So 3 methods to take profit. People talk. Then this one is freehand. Then I open monthly to see whether the price nearly to the historical high or not. Wow. Historical high is over here. Why monthly rejection? As you can see, they already hit the resistance. So let's say here many people short. Remember basic thing trading, at the resistance we short, at the support we buy. Oh, so still uptrend, but you may expect for the retracement for a while. Okay, you have, let's say you want to buy, you can wait for the breakout, then breakout, or but quite risky for me lah. You buy after the final breakout. Actually, they need to penetrate this level first. This one is a resistance. Let's say they penetrate. I don't know how much, but will go up. Once they pull back, yeah, this one level should be your buying zone. Then they will go all the way up lah. Okay, another example is rectangle. I can see rectangle over here. Rectangle. Consolidation, compressing over here, and then suddenly the price break up with a big marubozu, after the earnings, big marubozu, and then they make the retracement. After the retracement, then you enter. But for sure lah, if you enter, they will not quickly go all the way up lah. They might be floating for a while. For example, here you see this thing shadow here, so they will affect your emotion a little bit up, and then sooner or later they will go up lah, go up. So hit your first TP, for example, and then if they want to continue this uptrend, they should penetrate, and then proven here, close over the resistance. This candle close after the resistance, then pull back. pull back, then they continue to go all the way up. That is market structure that I wanted you to understand. Okay. So for the current price, I expect that from swing low to the swing high, let's say this one is swing low, swing high. Later you will learn a Fibonacci, swing low, swing high. So here, not even 50%, 38.2 maybe. Then from here, that's why we can expect the price to go all the way up. For example, that is a hectic retracement. This one is retracement, after retracement. So just stand by for the price to go all the way up. Okay, click the top, next one. Okay, this one also rectangle. Rectangle. Actually, you don't need to know what type of sub pattern is that. Either double top, double bottom. As long as you see the price compressing rectangle, you just identify the support and resistance. This one is resistance, they break up, they pull back, and then here you can enter actually. That is rectangle. That's why I love rectangle. Trend line sometimes can be violated, but rectangle, most of the time, many valid breakout I have seen. Okay, thank you, Kate. Okay. Okay, last person I want to see before I want to demonstrate one more time in my trading view regarding to the sub pattern. Okay, who else want to share? The last person I want. Gurman, can you share? You said that this sub pattern is quite confusing, right? Let me guide you. It's okay. Indira, Kang, Lee Soo Yong, Steve Yam, do you mind to share? Or do you have any question before I go to? Okay lah, I just demonstrate my trading view. Okay, what kind of stock or instrument do you want me to share? Any suggestion? Okay lah, let's say lah, we go for Apple. SKLI. SKLI. First thing first, I go for monthly, whether market bottom or market top. Oh, the market bottom, you know. Strong support over here. So I may expect for monthly, they will be consolidated for a while. So roughly you can see the monthly at the market bottom. So We remove this one. We can draw trend line. So this is market bottom. Okay. This is the resistance. Actually, I like to draw a rectangle by using the last candle. The size of the last candle. So this is my selling zone, for example. You can take this candle, the size of this candle, the size of this candle, but I prefer this lah. So, okay, let's say lah. Okay. Forget about the chart pattern for a while. The support and resistance. Okay. From here, they form first resistance. And then, so reject. They reject, they go all the way down. If they come back into this zone, what should you do? Then, sell, right? Okay, I'll give you, actually we have two types of confirmation. Number one, breakout lah, breakout confirmation, break up or breakdown. Number two is rejection confirmation. Rejection. In this situation, they didn't manage to break out. Instead of they reject. So they reject from here. From here, if they go up into this zone again, then we can short. Okay. This candle not unable to reach this level. Okay, second time, first try, second try, third try, they collect the order, short order. Then from here, we see the price drop. Why? Because they respect this selling zone, this signal here, rejection confirmation, breakout confirmation, rejection confirmation. In this situation, we refer rejection confirmation. Okay, so remember, we have only two type of confirmation. Number one is breakout, number two is rejection. Please remember that. Okay, this is chart pattern also actually. Okay, this is the resistance, right? So let me draw. Okay, so this is a complete chart pattern. In this situation, they break down, pull back like a one. Sorry. Okay. It's like a fake out lah. One has to be careful. Break down, pull back, we enter here. They cannot hit our TP here. Actually, they hit our first TP, which is here. We enter here, we TP here. Unfortunately, they are unable to reach the TP2 or the nearest support. So consolidate. This is the neckline. Very, very critical moment. We have to wait. Let's see the price decided to break down, then you see pull back and short over here. You see they will close this gap, for example, but there must be a roadblock first lah. They must reach this level first. If they want to continue this downtrend, they should penetrate this level. I don't know how long they will go down. As they come back upwards into our zone, then something like that. That is the cycle in financial market. But let's say, yeah, this right now is consolidation, right? Let's say they want to penetrate this chart pattern by doing breakout. And then we can expect that the price will go up. We can enter here as our buying zone. Buying zone. Okay, we refer to the yeah. Let's say they break out over here, pull back, then we can enter here. So TP1 should be here, TP2 should be here, TP3 should be here, for example. They must respect the resistance. Resistance cannot be easily penetrated. They must be first hit, second hit, and then for the third time, only then they can break out. It's like that lah. So this is also chart pattern. Okay, that for the current price is sideways, I know. Sideways, but it's actually also a retracement for this uptrend. Retracement. So this one is retracement, 50% level of retracement from this 100% movement for uptrend. And then they sideways for a while. Who knows they form chart pattern? Who knows? Okay. Also here, but for the current trend is still sideways. Sideways after uptrend or retracement after uptrend. This is also chart pattern. Here, roughly like. Breakdown. First retracement, they are unable to collect our order. Let's say you put your pending order over here. They are unable to collect your pending order. And then for the second time they try, they collect your order. But they cannot easily go all the way down from here. They must consolidate or for a while. Then, yeah. So this they break down, so automatically this one should be our selling zone. As the price go all the way up and hit your and come into your selling zone, then just keep selling lah. Keep enter selling position. That is BPE. So you see the price breakout or breakdown from this chart pattern and double top. First top, second top. Three types of method to take profit, right? Just can repeat this video lah. This high, and then you can calculate the candles, and then after the breakout, your TP1 should be the nearest support or resistance. And in this situation is support lah, because we short, right? As simple as that. Okay. Just keep drawing lah, keep practice. Go and read back the notes, and then just keep drawing. For example, head and shoulders. Okay, this is the neckline. And then basically from uptrend lah, from uptrend. So I expect the cycle. Economic growth, consolidation, there's no momentum of the growing. And then we expect for the reversal. Then we just wait for the breakdown. Then pull back. This is our selling zone. Go all the way down. This is for head and shoulders. For rectangle, sorry. For example, let the market decide either they want to break up or break down. So if let's say they break up, this will be our buying zone. If they want to break down, this will be our selling zone. That's why we let the market decide for us, and then we react accordingly. Okay, and then M pattern, yeah, M pattern is double top. Must happen after the series uptrend, for example. And we expect for the reversal, breakdown, short, this pull back, come into our zone, our selling zone, and we short here. Then they drop. That is the concept lah. There is no right or wrong. You must have put your stop loss over here. Must have trading plan. It's double bottom W, right? Wait. Just now it's SPLR, right? Okay, just okay, right. For example, double bottom W. So double bottom is downtrend from downtrend to uptrend. So we expect downtrend, for example, and then consolidate sideways or accumulation phase. We may expect for the price to break up, and then I don't know how much the price will go up. Once the price pull back, this will be our buying zone. Stop loss over here, and then we may expect they will rebound. First TP, second TP should be here, third TP should be here. As simple as that. Support and resistance. So far so good. Before we finish our session here. So far so good, everyone. Understand or not? Yeah, clear. Okay. What do we what what do we do between the stop loss or the stop loss? Okay. Example lah. Risk to reward ratio lah. The more the easy example is risk to reward ratio. Let's say lah. Let's say okay. Here is your chart pattern. To enter here. To enter here because this is your selling zone. I choose this candle, red candle here as our selling zone. So I delete this. Let's say this is our selling zone, right? Our selling zone after they break out from this chart pattern, then I delete the chart pattern, the rectangle, and then I more focus on this selling zone. Okay. Let's say you enter here lah, here. The stop loss must be above the resistance level. The resistance level. Let's say your TP is the nearest support. Nearest support means over here roughly. Yeah, this is your target. At least 1 to 2 or 1 to 3. So your stop loss should be above the resistance. Let's say the price go all the way up, and then you may expect that you short here. You may expect that the price will drop, right? But somehow the price go all the way up and hit your stop loss. Stop loss should be here lah. So 1 to 2. Okay. 1 to 2, your risk to reward ratio. Clear, Martin? Okay. Later I will emphasize how we will keep doing this zone lah, selling zone and buying zone. We will keep practice. We train your eyes lah. For example, here also the zone. Let's say the price, this is like a chart pattern, right? They decided to break down. Then, okay, how to smaller your zone? We must, I may prefer the size of this candle or this small candle. Don't too big lah. For example, this. Okay, let me zoom in. This candle also can, this candle also can. Then I draw my zone. Okay. This is chart pattern, right? They break down. As they come into back my zone, you see they collect our order. Then they drop all the way down. And then hit our first TP. And then second TP. As simple as that. They must respect this. So your stop loss should be over here lah. Roughly like over here. Okay, so far so good. Before we finish this tutorial, Any question? Okay, no, right? So I think I have to finish here and then see you the next week. Okay. Good night, everyone. Welcome, Martin. Welcome, everyone.